Welcome to Crops, Cattle, and Charley. I'm Aaron Smith, and I'm joined today by Andrew Griffith and University of Tennessee Farm and Financial Management economist Charley Martinez with the Department of Agricultural and Resource Economics. Dr. Martinez is going to be discussing the first quarter of the Tennessee farm economy for 2020. So Dr. Martinez, were some key points from the report?
So I think one of the first things you got to look at in the report was where we were in the fourth quarter of 2019, and we were at negative 176 million. And in the first quarter of 2020, the farm economy dropped to 386 million, which is a drop of approximately 210 million. And I know that sounds like a large number, and it sounds bad, but looking back against past reports, it still puts us above the 2018 and 2019. And just below the 2017 first quarter or the quarter one reports from those years. And some of the reasons, obviously, for on the livestock side of things, there was hopes for higher prices in the first quarter, and we saw some of that. But then as prices lowered at the beginning of the year, as we went from January to February, prices were starting to decrease. And then, of course, in March, we had the big COVID push. And so that's going to be captured in that March, inside the March month. And so therefore, in the first quarter of the economy. And then when you start thinking about that, especially from the livestock side, in all markets, we really saw a decrease in prices. But one thing to keep in mind is that although we did decrease 210 million, there was a program put together by the government in response called the CFAP program, and so some of those payments will be that were decreased there will be recouped in the second quarter of 2020, and so hopefully moving into the second quarter, we'll have some kind of little bit of a parachute going into the second quarter of 2020 because of those payments.
Dr. Martinez, if producers feel that they aren't exactly hitting their targets financially, what can they do moving forward?
Well, and that's an interesting question because from the farm economy standpoint, we have a large amount of producers that are that don't use the farm income as their main source of income. They do have another side or personal income that helps with the farm. And when we look at the farm economy and we see that low number and it decreasing by 210 million, there are still some producers out there that were taking a hit, and for them, those people, I think. Classic benchmark checks like ROI and ROA would be very beneficial. Checking and analyzing your cost structure and figuring out where some decreases can occur or where some costs that are happening that probably could be decreased. And I think something that's really popped up and it hasn't been talked about enough is risk management. And when we get to the kind of situations like this and COVID-19 hit, if you had a risk management plan intact, you're probably doing a little bit better than other folks. But if you didn't have a risk management plan, maybe this is one of those times in those instances that kind of shows you that it would have been beneficial to have a risk management plan in place. And then and I think moving forward, in especially if you've had a loss and you really don't have a risk management program or a risk management strategy, but you know that you've had a loss, and there are still ways for you to kind of recoup some of that loss. If you haven't enrolled into the CFAP program, that's definitely one way to capture some lost revenue. And then especially if you're not in like government programs such as the DMC for the dairy side of things, the enrollment's coming up pretty soon. And so stuff of that nature, I think, are ways to try to recoup some of the lost revenue from this past year.
Excellent, good information. Thank you for joining us for Crops, Cattle, and Charley. We hope you will join us again.